How is it going, people? The markets are in a make or break situation right now. I will be perfectly honest with you. It is looking to be a risky game currently, but you are here for one reason and one reason only, hopefully, and that is to really understand where some of your favorite stocks are going to be heading next week. And to do this, I have listed all of these stocks down in this timeline below, but before we get onto that, it will be very fundamental to understand the macroeconomics in which have led to where we are now and where we can actually expect to go from this. So if you do want to just skip ahead to your stocks, then please do feel free to do so. But if you really want to understand why the market is doing what it's doing, then let's get into this. After 2 weeks of gains, US equities struggled. The S&P 500 and the Nasdaq were modestly lower, and the Dow Jones has now dropped over 1% for the week. Investors reacted to various cross currents, geopolitical tensions in the Middle East, Israel and Iran, of course, softer inflation data, and anticipation of the Federal Reserve's June meeting. Late last week, Israel's actions in Iran sent oil spiking 7 to 8% in the upwards direction, with WTI hitting $77 before retreating. That stirred a late week equity pullback. Safe haven assets such as gold jumped, whilst oil producers and defense stocks posted mixed moves. US CPI rose just 0.1% in May, flattening annual CPI at 2.4%. Near a 4-year low. At its June 18th meeting, the Fed held rates at 4.25 to 4.5%, citing inflation still elevated, but progress is being made towards the 2% goal, which is obviously positive. The Fed also raised its year-end core PCE inflation outlook to 3.1%, signaling 2 total cuts in 2025, whilst pushing the timing into later on in the year. Personally, my own prediction is it will be probably the first one late August, early September, and then the next one won't be until potentially around December. But it's really hard to call because who really knows where the world's going to be in that time. Governor Christopher Waller emerged bullish on July rate cuts, arguing tariffs have a minor inflation impact, but Richmond Fed head Tom Barkin cautioned against hasty moves, noting inflation remains above the current target. The FOMAC decision was a unanimous decision to hold, coming in at 12-0, with governors signaling data dependency. President Trump criticized Jerome Powell, calling him stupid and hinting he might replace him amid political tensions over Fed independence. So looking at the market movers, AMD surged 9% on optimism of its AI event, and broader chip manufacturers also rallied, such as Micron, Meta, NVIDIA, Broadcom. Amazon all saw gains earlier on in the week as markets rebounded before the late geopolitical jitters. Oil stocks were volatile, initial gains with rising oil costs, of course, but then there was a quite heavy pullback on these. Defense contractors like Lockheed Martin dropped nearly 4% after the Middle East flashpoint. This is basically just due to the majority of swing traders pulling out of these positions now, as the news has almost stagnated for the remainder of this week since around Tuesday. Gold climbed above $3,450 per ounce, briefly near record highs, and 10-year Treasury yields rose modestly to 4.45%. And on some flash insights, CEO sentiment hit a 5-year low. Many plan hiring or investment cutbacks over the next 6 months, which of course is not good for a bull market. That is actually a very, very strong case for a bear market. Realistically, CEO sentiment is one of the key metrics in which a lot of hedge funds and big investors do look for. And when this is being cut back, it's fair to say that people are going to start to panic. So blue collar real wages outpaced general inflation, a 1.7% gain versus a 0.9 CPI rise over 6 months, and markets remain calm, almost to a certain extent, with the current fear and greed index coming in at neutral. So coming up, we have to watch for the Q2 earnings releases coming into the next couple of weeks. US retail sales, housing and global central bank meetings, the BOE or the BOJ, the next Fed minutes meet. This will be on July the 29th to 30th. Markets will be tracking how tariff data and labor signs influence rate decisions, because realistically, it's fair to say that we are expecting to see this implications of tariffs actually come into effect within the CPI data in July, and realistically how the markets will react to this will be very fundamental for almost the remainder of the year and how interest rates are going to be set. Middle East conflicts and US tariff timing could be the next catalyst for where exactly we can really predict the market to go. But again, with this super uncertainty right now, it is almost impossible to call where this will go, but I will do my own technical prediction on where I think the market will go towards the tail end of this video. So let's start off this independent stock section with the biggest bang of them all, and that is of course NVIDIA. So looking here on an hour chart, we can see that this stock basically just went sideways with a slight upwards uptrend heading throughout the week, but there wasn't anything in particular to really note. If we do look on a day chart, we can see that today wasn't actually particularly a good day. If we actually do look here, we have now just played around with this fair value gap, which could indicate that next week could really be bullish, especially if we're closing just about on it, which is incredibly strong. So in next week for NVIDIA could definitely have a positive, early outburst, but of course it really does depend what happens over the weekend. Now, if you are wondering why you can't see my beautiful face, it's because I am sweating my absolute nuts off. In the UK right now, it's like 30 odd degrees, and I personally, and certainly my flat, is not built for this sort of heat. We're not like you Americans where we get lots of lovely air conditioning in our houses. That's kind of unheard of. But getting back here to the NVIDIA analysis, we can see that it is in a golden crossover on the EMAs, where the 50-day and 100-day moving averages have now crossed over. Obviously, NVIDIA is in a momentous position right now, with it being well above all of its EMAs. So NVIDIA, it should have a potential good upside for next week. But again, with it being the largest cap of American stocks, then this stock will be most volatile to any potential regional news. SOFI. What a stock, what a week. I can't believe SOFI has actually had a good week, and it's actually ended good as well. So SOFI has actually jumped up a significant percentage this past week, mostly due to the potential the decline in interest rates, or two declines in interest rates throughout the remainder of 2025. Obviously, SOFI reacted really quite nicely to this, so we can expect to see that SOFI could potentially jump up from here. If we do look at the fair value gap, we just briefly brushed upon this, and if we actually look to price targets or not, because I'm still not paying for TradingView, by the way, there is no way I'm ever going to give in. I will go to the end with this battle. We can see that the analysts do suggest a upside of 31% on the high side, but the average is actually now below where we currently are. For me, I still think SOFI has a lot, and when I say a lot, I mean a hell of a lot of room to run. Maybe not this year, but going into 26, 27, the long-term gain for SOFI is just absolutely incredible. SOFI is currently at a price to earnings of 35, and if we do actually look at their forward PE, this is weirdly all the way up at 42, despite the actual analysts predicting that SOFI will grow 63% over the next 12 months. So I really am not sure what the hell has happened there. If one of you know in the comments, then please do let me know how they managed to pull that number out of their behind. So that's a weird thing to note with SOFI, and the price targets, in my opinion, they are way too bearish for a company like SOFI, especially when you compare it to industry partners such as Robinhood. This has seen a massive spike up, and it is now at $78. This looks to be as if it has got a lot of momentum on its side. Now, I was in a position on Robinhood, but I sold out at $77, I believe, when it peaked up around here, and I'm glad to be out. To be honest, I'm really unsure how much further this can go based off my formulas, but according to the high end of analysts, this still has a 33% upside. So if you are in Robinhood, then adjust your stop losses and remain in this position, because there is definitely a lot more to potentially gain from this. AMD, Advanced Money Destroyer, has now officially broken out of this regression cycle here. It is now at $128. Congratulations, AMD. You have finally done it. And to be fair, I am incredibly happy for it. So I have previously been an AMD hater, which is hence the name Advanced Money Destroyer. But you might be thinking, oh, this guy flip-flops on his stock picks. Well, that's what you should do. If you are holding or looking at AMD here and you're seeing it fall and you say, oh, it's a great stock, I'm going to buy it, you're doing it slightly wrong. I hate to break it to you. Why would you buy a falling stock? Now it's starting to rise. I see the upside. I see the momentum, and I say AMD all the way. This looks absolutely incredible right now. It looks to be set up as if it's going to climb up a massive amount, and the high end of analysts put this in at a 55% upside, which for me, I think is absolutely bonkers. I personally think this will be between 140 to 148 on a sustainable front, but the realistic side of AMD now is that investors aren't seeing this stock as a replacement for NVIDIA. They're now seeing it as the number 2 option, which is not a bad place to be, especially within the world of GPUs, CPUs, and you name it, data centers. It's an incredible place to be number 2, and I think it's about time markets caught up with this. And if we do look here, there is actually the start of a MACD crossover, indicating the momentum is only just going to start for AMD if next week performs well. So Tesla has had a relatively sideways week. For me, this is a stock in which I don't really like. It's massively overvalued. And I mean, to be fair, it's always been overvalued. It's currently at a PE of 185, but it's always at a PE of around 185 realistically. It is in a long position on the MACD, and the average analyst says it's overvalued, but the high end is a potential 55% upside. If you believe that, then fair enough. I mean, realistically, it could definitely be, but for me, I don't really see much reason to invest into this company. Realistically, what they have going for them now is the robo-taxis, but when you've got Volkswagen saying that they're doing their own version, and the other company, which I've completely forgotten the name of, also doing it, I think it's Waymo, but that might be wrong. It's fair to say that realistically, what sets Tesla so much apart from these competitors, apart from the name Tesla, but now you've got Volkswagen doing it. Obviously, they've got the robo-taxis. Don't get me wrong, Tesla's an amazing company, and for a long-term play, an absolute gem of a stock, with it being one of the Mag 7s. But for me right now, I'm not seeing any juicy, like anything to really make me say, wow, get that in my portfolio right now. It's just, there's better stocks out there. Sorry to you Tesla fans, and I'm sure you've already disliked the video. Moo, moo, moo. I want to hear you say yeah or whale. We're looking at Moo, which is MICRON technology for those who aren't familiar. So this stock has absolute massive momentum. I am in this stock, hence why I've actually done a bit of research, or a bit more research into this. So it is correlating relatively nicely with this line, which I drew way back when, which is roughly around where I bought in. Sorry, something in my throat. I do expect us to hit this resistance and possibly bounce back, and then from there the momentum should carry through. Now, the average analyst puts this stock in at a 3% gain from here, with the top end being a 40% gain. And for me personally, I actually think there is a high side of 185 based off of my formulas. And if I'm being perfectly honest, my formulas actually said it was way higher than that, but I weighed it down. So we are actually coming up to this level of resistance now. Price targets are obviously in the favor of this stock. And if we do or don't, look at these fair value gaps, we will actually see that there are some fair value gaps forming now underneath the current price, indicating there is a lot of support. So maybe next week we might see it fall back down to the level of 119, but realistically, I'm not entirely sure if we will see that. We are well into a massive long position on the MACD here with the golden cross. So for me, MICRON, an amazing momentum stock to be holding. Don't ask me why I did that. That was a genuine stutter. Apple, an absolute boring company. This is going to be a very short section for me. It's kind of uninvestable. There isn't really much going on in the world of Apple. They've come out with an iOS update where they've said, wow, look at our phones. They look like glass. It's like, who really cares? So for me, Apple, boring. I struggle to see this stock unless they come out with something absolutely massive and groundbreaking in the coming years or months. Then I think the stock could be the next Nokia. To be honest, it could just fall off the face of the earth. I mean, realistically, when was the last time you bought a new iPhone in cash? Probably never. If you are on a contract, it's different. But for me, I bought mine out in cash, and it's like, I don't need a new phone. I've got an iPhone 12. The battery might be a bit shit now, I'll be honest. But for me, the phone is perfect. I'm not going to be buying the new iPhone for another couple of years. Hims and Hers, an amazing stock at the moment. We're actually seeing it have an uptrend, which is absolutely incredible. And it is actually hitting this fair value gap here. So next week could be really good, but it's really hard to say. Healthcare stocks have been doing relatively well recently. Novo Nordisk has had a downwards trend, which has broken my heart. I did expect it to fall off, but not this much. I will be honest. I'm out of this now, but I will be looking to get back into this just because for a long-term play anyway, there is still a lot of upside on the average price target. So on the average, we're still expecting a 33% upside. The maximum is coming in at nearly a 90% upside. And my target is at $142. This current stock is at $74. So this stock looks to be one in which could go ballistic when... Well, it's really hard to say because I would say when the market catches onto it, but the market catches onto it here, but it really didn't break through this level of resistance in which I marked out. It just about tickled it. I'm not entirely sure if you'll be able to see that, but there is a wick there which just brushed it and then it fell back down. On the topic of healthcare stocks, OSCR Health has done absolutely incredible in the last couple of days. So congratulations to those of you that got into this position. It is now in a golden crossover on the MACD. So that is absolutely incredible. It surpassed all of its levels of resistance. This stock, I am actually recording a video on OSCR Health. I'm doing a deep analysis into it. So if you are interested in OSCR Health, hit a subscribe because that'll be coming out in the coming days after this video is out. And looking at Meta here, we've just seen this fall off massively last week. It's a company in which is really confusing. I do think that this will chase its all-time highs still from here. It is still in a long position on the MACD and well above all of its EMAs. So for me, it's a stock to definitely watch. Maybe if you are looking for a more sustainable stock, then Google might be your better option. But this is actually something which fell down absolutely massive amounts today. It was down around 3 or 4%. I'm not actually entirely sure why, so I will actually look into this for you now. So essentially, according to the trusty old ChatGPT, it's just essentially more antitrust headwinds, which for me, I still don't understand how that can realistically be a factor for Google. Obviously, it's got a monopoly on the Chrome and search engine market, but who could it possibly sell this off to? Nobody who doesn't already have some sort of a monopoly will be able to buy this. I mean, who will buy Google Chrome? Apple? Well, they've got somewhat of a monopoly on the cell phone market within the US especially. Obviously, you do have Samsung, but I do believe Apple have actually surpassed Samsung now. And realistically, who actually buys a Samsung phone? Sorry to you Samsung users, but they're just a bit weird. But, you know, it's hard to say where Google will head. I still think it's going to see massive upside towards the tail end of this year, and this could be an amazing buying opportunity despite the price now being below all of their EMAs. So is this actually what I expect to happen with the market in the coming weeks? Well, to be honest, no. If you genuinely thought that's what's going to happen, then you fell for my trap. I'm very sorry. I'm not Mystic Mac. I cannot realistically predict what will happen because that means that I can predict if Israel and Iran continues for the next coming months, which obviously nobody knows. It might not even continue past the weekend at this point. It is very unpredictable, but as you can see here, we are in some sort of a bear trap. We can expect to see this market potentially fall down if it doesn't kickoff in the early week, and to be honest, it's not looking particularly good right now. As mentioned earlier on in the video, markets are definitely struggling. We've seen CEO confidence fall. We've obviously got Schiller's PE at 37 currently, which indicates markets are massively overvalued. And not only that, earnings are not catching up with expectations. But when you do look at how many stocks are at all-time or 52-week highs, last week, I haven't checked it this week, but I imagine it's roughly the same. It was only 8% of the market. So that indicates that realistically, markets aren't pumping as much as they look to be, despite us looking to be massively overvalued. So for me, that actually puts me in a very, very bearish situation. But often when you say it's going to be bearish, we see the markets pump. The markets tend to do the complete opposite of what they should do. But looking at this bear trap here, it looks to be as if we're going to pump up and drop straight down. But again, that's really hard to call. Do not take this as financial advice. I am not a financial advisor, and none of this is financial advice. You need to do your own due diligence when investing into the stock market, and when you do, your capital will be at risk. So I'm glad I got that out of the way, because I realistically am not a financial advisor. You should only take this with a pinch of salt. But that is just where I think the markets will head. So next week, I expect them to jump up potentially, as we do look to be massively, well, not massively, but certainly a bit oversold currently. But from here, we could actually see the markets fall down and hit probably the 150 EMA. And from there, I do expect them to pump, because around that time, we will most likely see rate cuts. So that's my prediction. But again, not financial advice. So I hope you have enjoyed this video and found it somewhat useful. Again, not financial advice, and I would like to shout out the 6 people that consistently like my videos. You know who you are. You lot are real ones. I really do appreciate you all. Obviously, I am sweating my nuts off right now, so I'm not turning my camera on because it's not a good look. It is boiling hot, and it's not good at all. So if you could leave a like and subscribe, it would be greatly appreciated, as I am trying to build a mini empire of stock analyst viewers. So if you could hit the like and subscribe, I would be forever grateful. With that being said, I hope you have enjoyed, and I will see you for the next video.